Item number 15 is an infrastructure policy revision. Dilo?
Dilo's coming up. This was something you had requested of us. When we looked at the last transaction, we take discretion very seriously. We gave it a lot of thought as to what the right levels were. I would let you know, and obviously given the lengthy discussion of the last two transactions, we're under no preconceived notion you might approve this. But if there aren't that many questions and you approved it, or we wouldn't mind if you were willing to consider approving it on a first read. There is a transaction in the pipeline, so just be aware that will be on the April agenda. Not that we're trying to sway you either way.
And Ms. Chambers from PCA, for the record, is also with us. Thank you.
Good afternoon, Dilo Sanivaratna, Portfolio Manager Infrastructure. With me here today is Judy Chambers from Pension Consulting Alliance, who has provided an opinion on this red line of the policy, and it's attached in the agenda item. At the November board meeting, as Chris was mentioning, the board recommended that staff be given discretion for investments in infrastructure. This policy revision is related to that recommendation. There are two minor edits that are not in the red line that staff would like to highlight and would like to incorporate here. One is in page INB 183. It's a table, the last column, where it refers to PFI. It's referenced as public finance initiative. It really should be private finance initiative. So the change is changing the word from public to private. The second is in the glossary pages INB 195 to 198. There are 4 words that are currently used in the glossary that are no longer in the policy body of it. The 4 words are capital improvement, internal rate of return, net operating income, and vintage year. So staff would like to get that removed if possible. If the board approves these edits and the red line document to the discretionary limits, the board can adopt this agenda item today at the meeting. If so, this will be an action item. If not, staff would be happy to bring this back as a red line item in the April board meeting if there are any comments or edits. And I would let PCA give any comments they have at this time and then open it up for questions. Thank you.
Thank you.
Hi there. My comments are short. We've been on a journey since 2008 with infrastructure, so we knew this day would come. So we are fine with the progression of the program. I think staff has followed the direction of the board very well, and we are satisfied with the proposed delegated authority levels.
Thank you, Ms. Chambers. Ms. Dillon?
Under H in the discretionary authority, under 1, it looks like some of the language that's being stricken is that the transactions pipeline quarterly report, that's what we would use if we felt a deal was that we might want to take a look at it as an investment committee. But it looks like that language is being taken out of this policy. So is the transaction pipeline quarterly report still going to come to the investment committee? And we still use that vehicle to be informed that there might be something we want to take a look at it? And if not, how do we learn about those opportunities?
We do a pipeline report for the rest of the asset classes. So we haven't been doing that in the past because we've been bringing all the deals to the board.
Here.
So in the future, if discretion is granted, that will be part of the pipeline report that goes along with the rest of the asset classes.
So we could keep that, we could unstrike that language. Do you see what you're saying?
Yes, and also after the deal is done, we will be sending a quarterly report as we typically do. It will be more detailed in the future when staff gets direction on these, discretion on these. But there's a report coming after as well. So we could add the pipeline language in there. It hasn't been a practice.
Right, because everything's
in
come
here.
to us so
Yeah.
far.
That's right.
Which
I
means
think we
Dilo
would-
gets to do a quarterly video from now on.
I was going
Oh,
to
you're
say
just really happy with me right now, aren't you, Dila? I think that would be a good thing, because it's one thing to have an opportunity to take a look at something that we might want to review and bring it to
Sure,
us,
we'd be happy
then
to bring
after
that
the
in.
fact, and then we would review it afterwards. So if we could do that, I'd appreciate it. Thank
Yeah.
you.
Stutterman?
Yeah, I think this is just a drafting comment. but when you can allocate up to $300 million to a firm, it's not necessarily tied to being an institutional manager or a partnership or somebody with a broad portfolio, and could, for example, be a firm that has a single project, and I don't think that's what you're intending. So,
right, yeah.
so you might want to clarify that language in the next go-round.
Is that in point one,
Yeah.
on page INV 190? Yes, these are the deals that are partnership driven, so those will be firms,
Yeah.
GPs managing the transactions.
Right.
So that will be typically a firm. Anything that is under section 2 would be more like a separate or joint venture structure.
Right.
That would not be a partnership.
Right. Well, and my concern is that we not have, by accident, authorized a way to say $300 million can go to a single project that stands alone. And I don't think that's your intention. I think it's just a drafting
It's,
issue.
Yeah,
it's,
no, we would-
it
I'll
is a
try
new
to-
firm, though. It is a new firm.
Yeah.
So it will be a partnership type of a structure. So it,
Leila, what we'll do is strike the word same firm and put in the word
Oh, got it.
same general partner.
Yeah.
got you. Okay, will do.
So, this was a policy that the committee directed the staff to bring back to us. Do we want to make those give directions and make those amendments here and adopt this at this point, or do we want to have them come back in April?
I'm fine with adopting it now with those
Okay.
I
corrections.
have some other, I just have some
Sure.
grammatical stuff if we're willing to,
And,
I can talk to Chris, or we can do it now.
no,
Doesn't
do
matter.
now. Okay.
Already.
Ms. Dillon?
Oh, I'm sorry. On, under discretionary authority again, there's a section, the very first line talks about approval and rejection decisions.
Approval.
It just seems we only need approval, we don't have to have rejections.
Right.
On 3, under H again, item 3, which will be on the next page. Second line from the bottom of the new policy, we don't need the word "so." It would read, "as previously done for the investment committee." And that's it for me.
Anyone else? Can staff or our consultant just read back what those amendments are? Does anyone have specific amendments that were recommended by the committee members?
We could definitely provide that.
I mean, do you have that now so that we know what we're going to be approving? Because the committee's willing to approve the item as an action item now with the amendments stated. Do you have them, Ms. Chambers?
Yes, that
Go
you
ahead.
wanted to add the pipeline report for the board on a quarterly basis. On INV 190, change, number 1, changing the same firm to the same GP, so that we don't have the mistake of it being a single project, but to a general partner. Then on number 3, taking out "so," and as well as back on number 1, approvals and not rejections.
Okay. Mr. Moore?
I had a question for Judy. In your letter, you mentioned that you'd like to see CalSTRS continue to add additional resources.
Yes.
What's an ideal size for the infrastructure section?
There's no ideal size per se, but right now you have 2 staff members working on the entire portfolio. So it would be great to add additional people, both at the junior and call it middle tier range as well. But given the fact that there are 2 people that do a great job with meeting managers and screening opportunities and so forth, but obviously with more staff, you just have more capacity.
Don't forget our grad student.
You'll be amazed at how many people they've.
No, we're understaffed. We recognize that. As you realize in the budget process, we have not, investments has not been given staff for the last 2 years. You approved 11 for this coming June, July 1, and that's going through the state budget process. I think it was in the governor's budget. So 2 of those spots are slated for infrastructure. So hopefully we may have to wait till July to get them, but we may be able to already fill them early if we have budget savings. So we are going to grow the infrastructure staff. and try and catch up with PERS, which is at 16?
Well, they have a different strategy, different approach.
Any other comments or questions from the committee members? If not, I entertain a motion to adopt the policy with the proposed amendments as stated. Moved by
Second.
Ms. Hendricks, second by Ms. Dillon. All those in favor?
Aye.
Opposed? Thank you. Thank you very much. Item 16. Securities litigation.
Litigation, love it.
Our general counsel, Mr. Bartow.
I just always wanted to say this. For the record, Brian Bartow, General Counsel. So what you have before you is a proposed changes in our securities litigation policy. And the changes have been several years in the making. This is Jennifer and I have been working on this for quite a while. And I'd like to break it down, briefly just break it down into two pieces. One is, well, let me, a little background. Our securities litigation policy as it existed a few years ago when I first started doing this work for you, basically addressed domestic securities litigation, because at the time that was the only securities litigation there was. That was prior to Morrison. It had a construct it was a good construct, but it could be better. And by that, and before I explain what the potential problem was, let me say that we work with some very fine attorneys and some very fine plaintiffs' attorneys, and I do want to make sure that I'm talking about potential problems and not any specific attorney or firm that we're working with. But the system is set up was that we would have independent evaluation of any potential securities claim, and it would be through a panel. And the purpose of the panel was we would use securities litigation plaintiffs' firms to do the evaluation, but then they would not be able to participate in the actual litigation if it went forward, if the board approved it and litigation went forward. Well, when we started doing this, we had 3 firms in the panel, and every time we got a pretty good case, 1 or 2 of the firms wouldn't do the evaluation because they wanted the case at the end. So we had a panel, and we really ended up just using 1 firm and then sometimes 2 firms, but certainly the 3rd firm just wouldn't do it. If it was a valuable case, we couldn't get them to agree to participate as a firm. And we're very careful about the cases that we review, and that's why you haven't seen many. And the other thing is because Chris and his staff are so marvelous. When we look at these cases, we don't have any damages. So, but the system, the way it works is sort of biased towards plaintiffs' cases. So when you have plaintiffs' firms reviewing these cases, they come with a bias towards bringing the action and trying to recover. And what we were concerned about was whether or not we had, first of all, we had a complete view of the universe of all the cases that could be filed. Because what you get is you get approached or you get suggestion from plaintiffs' firms, or as Jennifer and I would do, we would track the databases for cases that had been filed, and of course we would track major news stories or major revelations to see if there were cases. At the same time, what we started engaging with other members of other pension plans, other general counsels, about independent third-party evaluation and why we would have to use law firms. And we did not want to fall into the model of other pension plans where they would have a law firm review their data or have access to their trading information. We've never done that, and we never would. We don't think that that's the right way to go. It does have potential ethical pitfalls. There have been some recent stories about small pension funds that are in every major securities case brought by the same firm that happens to have their data. So we wanted to avoid that, and at the same time, we wanted to be able to have a rapid review of potentially valid cases that we could then look at ourselves and then decide whether or not we would bring it to you. If there was a disagreement, we would bring that to you. And so what we were waiting for is for the marketplace to catch up with us and see if for independent third-party providers of this type of service, and there are. There are law firms that are doing this, but are not doing the plaintiff's litigation, and so that's the proposal before you is to remove the pool concept, but keep the same separation concept. Instead, having an independent non-litigation firm with experience in evaluating these cases, do the evaluations, monitor our data for us, so that as I sit and represent you, I know the entire universe of cases that are being filed that affect our holdings, and so I'm not having to resort to what I think has been an effective model, but also it doesn't give me the type of secure feeling that I'm not missing anything, that we're not missing anything. And if you remember, we did have, when I became general counsel, we did hire an outside firm to come in and do a sort of a horizontal view of all of our asset classes to see if we had any unasserted claims because of the lack of comprehensiveness of the current system. So that's the domestic securities litigation change.
Questions for our general counsel? Okay.
The foreign securities litigation, again, we after the Morrison decision in 2010, now suddenly we had a securities litigation policy that didn't address a whole new area of litigation, and nobody knew, and still to some effect doesn't know now what that's going to look like. Yet we still we still hold a lot of equities in foreign jurisdictions. The crux of Morrison case was it depends upon where you buy the security as to whether or not there's jurisdiction by the U.S. courts and if you can apply U.S. securities laws. So we have a lot of equity in a lot of different countries, and yet there's still fraud. There's still fraud being created. There's still potential for recovery, but it's a pretty diverse series of jurisdictions, laws. Nobody has, and you'll see from the chart that we provided, nobody really has a class action concept like we do. So in our domestic security cases, we have some comfort that if we own the security, we're going to be in the class. If we don't move for a lead plaintiff, if we don't move to opt out, we're going to get whatever recovery the class gets, we're going to get. There's the foreign jurisdictions, there is no such concept. So if there is a fraud and if there is damages and if we have suffered damages, there's no recovery unless we go in and bring some sort of action. As you can imagine, there's multi-jurisdictional, it requires a lot of expertise in a lot of different jurisdictions. It's not something it's a nascent area of the law. It's not something that we have come up with, a really terrific centralized system, such as the one I was talking about, domestic securities litigation. And I've challenged the people who are working in this area to say, how do I know that we know all the potential claims in all the different countries? And at this point, folks are basically telling us, well, you can't. Some jurisdictions, these things are not. They don't have public filings. They don't have online resources. There are cases can go on different times. There's different access. So each jurisdiction they put together various sort of ad hoc constructs to try to recover damages. And so we've, again, we're holding the industry's feet to the fire because what happens is, for example, we have a case, we're part of a case, Olympus in Japan. Well, I'm not familiar with Japanese law. I'm not familiar with who would be a great law firm to have in Japan. But Olympus was certainly, would be considered actionable if it was a domestic securities litigation. We do have interest. So how do we do that? Well, because where there's potential recovery, the lawyers will find a way. They do put together these different vehicles, and they'll say, okay, well, this is the law in Japan. This is the only way you can litigate this as a group. These are the type of claims. It's not a class action. These are the financing. You have to finance because most of these places are both opt-in and loser pays. So if you lose, you have to pay attorney's fees. And also, there's no contingency. So unlike the domestic securities litigation, which basically, other than administrative, there's no financial risk to us when we do that. Again, there's a huge administrative risk as far as discovery and disruption that we've talked about in other cases. So the construct is, I'm sitting here representing you and saying, okay, well, that's fine. There's money on the table. How do I get it? And then it's a different construct, and we look at it. And so getting back to what I've held the industry's feet to the fire is, okay, but what U.S. firm am I dealing with? Who is the person I'm going to talk to in the United States, and whose errors and omissions coverage am I going to call upon if there's an error? And we have managed to sort of get that out of the reputable plaintiffs' counsel that we deal with, and we have historically dealt with good, solid U.S. firms that we look to. But each construct is different. There's generally, I would say, because there is no contingency fees and there are loser pay fees, that we have to have some sort of financing group. And also, the percentage of recovery is a little higher. And that marketplace is still trying to find its appropriate spot. So we may, in a domestic securities case, we may look at somewhere between 10 and 15% is the most I'm going to agree to. Whereas in some of the foreign stuff, we may have to go as high as 25 or 30 because we can't participate otherwise. And it is a take it or leave it situation. So there's a lot of risk. There's a lot of analysis. It's very, very fluid. And we have developed a model for looking at it. You see the series of questions that we ask. And yet it's something that, I think that we should pursue. There's potential recovery. I wish I could tell you that in cases that we're in, we've recovered money. We're still waiting. I thought the U.S. judicial system was slow. I was wrong. Some of these are much slower. And so the policy change before the policy addition, it's not a change, it's an addition, is trying to cover some of those issues, allowing CalSTRS to engage in this type of litigation, recognizing the risks, allowing me to work with the chief investment officer, the CEO, and I'm proposing the chair of the investment committee to react quickly to some of the items that I would be required to review and to report with those co-decision makers I've listed in the policy. We may add more. So far, those are the ones that we've really held folks to the fire. So that's the proposal. And Jennifer did a lot of work on this. And is there anything you want to add? Please skip.
Let me open it up now
Yes,
to
please.
questions or comments from the committee members. Mr. Arterman,
Yeah, I just move approval of policy.
Second.
moved by Mr. Arterman and seconded by Ms. Hedricks to approve the policy. Discussion. Ms. Dillon?
Hi, Brian. I have a couple suggestions on the policy before we pass it. If the decision in Morrison and National Australia Bank is fact, I don't think we need to include that in the policy. I don't think we have to reference the case at all. We can just say shares purchased on a foreign exchange are not protected by United States securities. So, and then the first sentence in the policy reads really awkwardly for me because it almost sounds like in situations where we have obtained shares on a foreign market that there are allegations of improper conduct. So I have some suggestions for you.
Great.
Let me see if I can move them so I can read them at the same time, because I actually thought I could talk to you about this and,
We didn't get a chance to.
yeah, beforehand.
I
So,
could see why that sentence is awkward. Didn't seem at the time I was writing it, but now it does.
so I think you could say, in situations where CalSTRS obtain shares,
It's going to say purchased.
okay, but either way, that's not where I'm going.
Okay.
On a foreign market, and there are allegations of improper conduct of such entity with no reasonable expectation of recovery. And,
Also during it, it should be full recovery.
pardon?
Full recovery.
Oh, there you go.
Got it.
And then, if we're gonna write out chief executive officer, then we probably should write out chief investment officer.
Okay.
And instead of, thinking with approval of the chief executive officer and chair, on the recommendation. With approval, CalSTRS may.
So with approval by the CEO and the chair, CalSTRS may. Okay.
And with approval of the, yeah.
And with, okay.
Anything else?
Teachers, Danny, you're always,
I'm
you always,
sorry.
no, that's serious. You always,
Chris is over there smiling, I
bring,
think.
make us bring our A game, so I'm sorry, I got a B plus.
Mr. Moore?
Thank you.
Unlike an asset class that has consultants assigned to review policy changes, there is no consultant for this policy. Did the fiduciary council take a look at this? Do they have any comments?
Well, the fiduciary council did take a look at it.
Thank you. Any other questions or comments? It's been moved by Mr. Utterman and seconded by, is it second? Was there a second? By Ms.
Sharon
Hendricks to adopt this policy as an action item at this point with the proposed amendments by Ms. Dillon. Any further discussion? Seeing none, all those in favor?
Aye.
Opposed? Okay, thank you very much. Thanks. Okay.
Thank you, Jennifer.
Yeah, before you
Thanks,
go,
Brian.
hold on, Ms.
Oh,
Hedrick?
not for you, Brian, just
Oh.
in general, for the, I was looking back over the reports, I guess it's for real estate, Mike, maybe? I was looking back over, and I noticed like in infrastructure, our responsible contractor it's mentioned in the infrastructure policy, but I don't see it in the real estate policy.
I'll make sure it's consistent.
So I just wondered if it was taken out or where it is, or,
I know it's in the guidelines, but I'll make sure it's consistent with the infrastructure.
yeah, because there's a whole section in infrastructure about the responsible contractor policy, and I think with real estate, obviously, it's really critical that we have that in there. So I guess it would make me more comfortable if you could put it in there and maybe send it out to, I don't know what, because we're getting this
No, we
back
need
for
second
another
reading.
reading? Okay.
It's coming
so
back as
make
a
sure
second
it's
reading.
In the
Yeah,
second
whenever
reading.
you have a lot of comments, it always comes back for a second reading, but if you have few comments, then we put it on the consent. But when you have a lot of comments, I'm going to bring global equity and real estate back in open session action items, so you have a chance to full review it again.
Great, thanks.
Okay. Overview of the California investment policy, item number 17, CIO.
Thanks.
Gelman?
I am not going to take a half an hour. Yippee. The California policy in the back, with a couple things I want to point out to the board. Many of you probably didn't know we had it. It's kind of buried back there in all of our policies. While it was last revised in '08, that was a pretty small change. It really has not been touched since 2002. So it's literally one of our oldest policies now at 12 years old. And we listed this as a major objective for the investment committee was to revisit sort of California investments in total. And I thought a good outline would be using the policy. First, I've highlighted sections, not that we're going to change today, but just for you to think about of of things. And really, when I think about the big three things, first is what's our objective in California? We're always going to have pressure to invest in the state. We want to invest in the state. Having managed a fund in another state, I can tell you, thank goodness it's California because it's so diverse. An in-state policy, I'm going to pick on South Dakota, would be hard to implement, or Iowa, but here we have a lot of opportunity. But first we need to eventually decide what is the objective. The 2%, Frank, to his credit, challenged where did that come from? And we know who inspired it, but we don't know the genesis of why 2. But as you can see over time, we've made it. Sometimes have exceeded it, but it's really subjective to the portfolio. The other is terminology. We use the phrase emerging domestic markets. I think that's still used in some circles, but in the investment world, emerging markets is clearly, outside the developed markets, Mexico and South Korea and South Africa. So we're thinking, we tend to use urban and rural, and I've been challenged, and sometimes when we looked at this back in 2002, I could tell you we looked a lot at CRA zones, which the banks use. Then there was the problem about, redlining. Are those just, what about the neighborhood on the street on the other side? And I think one time we said, you know it when you see it, when it's there's not a lot of capital invested in an area. And you can think of towns, even in Sacramento, even in the Bay Area, where there's one side of the freeway that's very prosperous, and the other side of the freeway is not. So we're using the loose term of urban and rural, underserved. We could expand that to be capital restrained, but those are the kind of things we're thinking about, is sort of modernizing the language. And last really is just, we'll take the time in a little bit in the April meeting, but that's a big meeting, and more in May, or probably more in June, to really work with you to say, what kind of a goal do we want in California? I would tell you this fund's been invested in California in the 80s. We'll give you some high points and some low points at the April meeting. We will not withhold, or the names will be the real people. So you'll get to see sort of the highlights and the lowlights, and you've experienced some of those in California. I often tease my staff when they bring me a deal, oh, joy, it's in California. Uh-oh, it's in California. So we'll kind of go through that so you can sort of see the full range. Clearly, you're always going to have a lot of interest. The teachers, the legislature is always going to have a lot of interest to see the trust fund have a major presence in the state. We could also bring in people, we won't, but CalPERS brought in Dr. Bill Sharp from Stanford, who said, hey, your employers, all of your contributions come from people inside this state. Why would you want to compound your risk and own assets inside the state? Diversify. So you got to have some balance about in-state investment programs. And then lastly, as we go through it, you can see one of the hard things in California, and for anybody now, is let's pick Chevron, let's talk about Apple, let's talk about Google, you could even talk about Walt Disney, Facebook. Where are these companies located? We know where the employees are, but we also know they're not California companies. They're not domiciled here anymore at all. So what does it mean to be a California investment in a California company? We've even had some struggles with where we have given money to general partners and said, who said to you, we're going to be a California focused, but then they came back and said, well, gee, California's not business friendly, so we're investing in other places. So geography can be quite a challenge, whether it's tangible assets or intangible. We know when we own a bond of an entity in California, that's one thing, but corporate bonds, all of those it does, unfortunately, like Pandora's box, get tougher and tougher to find. But we'll give you some real-life examples in private equity, real estate, even in public equity of California investments. One of the challenges the board has always asked is, and other people have asked, what's our rate of return? We don't segregate these out and just say they're California, and we don't have a way to tag them to kind of sort them by a different way. We track the portfolio by asset class and by risk. And obviously the risk of I'll pick a pier in San Francisco versus a public equity, very, very different. and it's hard to match those and say you get a return from being in California or not. So what we'll do is pick some anecdotal stories of highs and lows to go through those, just so we kind of have the full breadth and recognizing the need to always be invested in the state. But I think also the question of how hard do we push that? The infrastructure policy, for one, has a view that if all things are equal, we're going to have a bias toward California or a preference for California. But as you know, it's almost impossible in the investment world for all things to be equal. Risk is very subjective and intangible, so it's hard to say the risk of this and that are identical. And I would tell you, having the goal of 2% from a staff perspective felt, kind of like a mandate rather than a goal. So words do matter, and what we want to do in California and what you want to do in California is going to be important. And I would tell you, obviously it's a tough time of year to look at this, 2014 being a state election year. We have felt, certainly at the staff level, that ebb and flow of an election cycle, and there's increased pressure to do something big or dominant in the state so that there's high profile. So it is very interesting with that. And as I promised, I won't talk for half an hour, so I'll open it up to any questions you might have. Just a light appetizer precursor to getting into California.
Ms. Dillon?
So Chris, the policy changes that you have made, would you like us to pass those today?
No, not
So
at
there's
all.
some
I'm just
consistency?
highlighting things that we need to be thinking about and that we would likely come back in the future.
No, I understand the highlighted part, but there are some that are blue and underlined that conform this policy with our other policies.
Oh, I'm sorry. Yes, if you would, sure, the executive summary. We're trying to standardize that across all of them. I didn't think about making that an action item.
Okay, then you don't get away unscathed. The last line.
You are on it.
The last line, as with other plans, and making that change, I would move approval.
Okay.
What do you want done? I'm sorry.
As with other plans, it says as will other plans, it's as with.
Executive summary, third paragraph, first line.
Yeah, I see what you mean by plans. What we're trying to pick up there.
No, I don't need an explanation.
Okay, sorry.
It's a grammar thing.
Grammar.
It's a grammar,
It's not a.
Okay.
as with other plan assets, not will other plan
Yep.
assets. And then I move approval of the policy.
Good job, Ian.
Okay.
Thanks.
Moved by Ms. Dillon with a slight grammatical amendment. Is there a second?
Couldn't just pick on Brian today.
Yeah.
We're going to make sure that's corrected in all, because that's language that went into every investment policy we have. So with
Well, that means it's on me.
with your acceptance,
But I
we would
should
like to
catch.
correct all of them as a giant group, so.
Are we
Seconded
voting,
by Ms. Ortega.
are we voting on the executive summary and the policy changes? Is that what we're voting on?
Just
You're only
that.
voting on changing the executive
Executive
summary in
summary.
my mind.
Okay.
Yeah. It's been properly moved and seconded. All those in favor?
Aye.
Opposed? Okay, thank you, that passed. Thank you. Review of information request.
Before you do that, I wanted to mention that item 12 requires a vote in
Okay,
the first report.
Move approval of, I'll do that for you.
thank you for that reminder, Mr. King. Go ahead.
Move approval of the diversity and management of investment report.
Moved moved by Ms. Dillon, seconded by Mr. Rosensteel. Okay, all those in favor?
Aye.
Opposed? Thank you.
Thank you, Lamont.
Thanks. Review of information requests.
So we have for Mr. Moore, we want to include the consultant commentary or recommendations and policy revisions, have that included in the investment committee materials. And I think there was a second one, but it's in the real estate policy, which will be brought back for a second reading, but the responsible contractor policy should be included there.
Is there anything else? Okay. Yes, go ahead, Chris.
Just a clarifying question, because I want to make sure I have it right. So you're asking the consultants, whenever we bring a policy, you would like a written letter from them about whether they opine or have issues, right?
Correct.
Attached. Got it.
Yep. Okay. Item 18 is the review of information, I'm sorry, item 19 is the review of the agenda for April. It's a pretty full agenda. There are some action items around investment opportunities, but it's also when we receive the semi-annual reports from our asset classes, and some information items. Chris, did you want to emphasize anything else?
Thank you. If I could, Harry, I would just ask, April is usually a long meeting, so think about that when you make your travel plans and expectations. Especially, I've just caught glimpses of some of the advice you gave the consultants, so if, maybe their presentations might be longer, so that meeting will be more full. Also, I would highlight item 15. You set your work plan for the next fiscal year in July. There was concern last time that we didn't give you a chance to give us broader input, so we're going to start it early in April. That's where you would bring up ideas, topics. I'll have a list, but you could bring up ideas and topics and lobby for them. Then we'd come back in June, and as a committee, you'd vote, these are the topics we want to do next fiscal year. Then in July, the board adopts that work plan for you as the investment committee. So. If
Thanks,
you have
Chris.
other things
Any-
you want to study next year, be thinking about them.
Yep. Okay. Ms. Dudderman, yeah, go ahead.
Comment, as we talked about, we thought about, rather than having the closed session at the end, beginning with it.
Right, thank you for that reminder, yeah. So in drafting the agenda, we'll do the closed session at the beginning. Thanks, Tom.
And one last thing. Working with Brian, we got some good ideas and advice on how to better do the, in this agenda, it would be items 7 and 23, the consideration of investment decisions. We'll only need one, and you'll probably get an email from me or from Harry prior to the meeting, so you'll need to respond to that, but it'll work well, so.
Seeing no other comments or questions from committee members, are there any members of the public at this time that would like to speak? Hi, Maggie.
Hi, Terry. Maggie Ellis, Chair of CTA Retirement Committee. This has been a very odd 2 days, I will tell you, and we're at the end, so I'll make it brief. But I did want to acknowledge Chris.
2 days?
3 days. Sorry, the last 2 days have been really weird. The first day was okay. I just want to acknowledge Chris. He came to our state council a couple weeks ago, and I know everyone here knows what a wonderful person he is and how his leadership in the field of investments is known worldwide. It's also very well recognized by our committee because when he comes, he is a teacher and he has a very personable presentation. I think this last time we had some of the most meaningful dialogue around divestment. Both you and I wish the people who need to be in the room were in the room to hear that dialogue and have that conversation. But through the education of both Jack and Chris and Ed when they come, we have become a very educated committee and therefore can go out and educate our members even more. So for those of you who don't know, these guys are like the second member of our family and our retirement committee, so thank you.
Thanks for what you do at CTA and your leadership on the retirement committee. Any other comments from the public? Seeing none, we'll entertain a motion to adjourn. We are adjourned.
Yeah.